Good morning, everyone. It's Chris from Solstice as well as Axel. You can find us on both websites, YouTube as well as X. The most important thing, we're going to cover some different sectors in the S&P 500, the Nasdaq, and a couple of different stocks on the weekly channel for the coming week. So most importantly, once again, you can find us here. Look at our website, how to get in contact with us. We're here to help, to give you the signal, and here are some of the packages that we do provide. Second of all, this is the YouTube channel. Subscribe to the YouTube. 27% of you do not subscribe to this channel. Subscribe to it. It's for free on weekly basis. I do give an outlook on the weekly channel. Second of all, you can find me on X in the morning. I do one tweet in the morning, pre-market, what the outcome going to be in the coming week. And remember, this is for educational, not an illustration use. We're not a broker dealer. And I want to go as far as August 3rd on the charts to show you something that I posted. Good morning. The overnight inventory is mixed between the S&P, Nasdaq, the Russell, and the Dow, Bitcoin, IGV, the MAGS, semiconductor technology, and small cap in relationship to the dollar, the VIX, the financial sector, move TNX, USO, and crude oil. Um, and I said we are awaiting Apple one more day for the earning report. We had, the gap fade in Microsoft, Amazon, and Google, what they expected move. And I keep an eye on 358.65, Tesla, and much more. And I showed, hey, SpaceX key on the 1 hour chart is 107.20 for a move back up. So I did not post it. I posted here. The combination of the four instruments, the S&P, Nasdaq, Russell, and the Dow. The next one was actually the small cap IWM, and I posted the different sectors in the S&P in the morning, and I said back to the hustle on that morning rush hour. So I can go through all this, but you can go do it on your own. And I wanted to show here what I did. On August 13th, I said the move from the IPO SpaceX, SPCX 135 to 151 is done on the pump and the sector rotation in IGV, XLK Semiconductor, and XLF. What did I do that morning? Let's click it. You can see the time. I did it on 7 a.m. If I open this one, this shows you SpaceX going from that 107 area where we called it on August 3rd. You can see it down here. This was the earning report down, the rally up, consolidate, breakout to the 149.60 area and reject right there. And I said the move was done. So basically, we're going to trade what we see on the charts. And I wanted to give this example for illustration use only. The second thing was the YouTube channel. Subscribe. It'll help you out on weekly basis. And this is our subscription basis for trading the algorithm, how it works. You can check it out. Let's go to the first chart that I have up here on the SPY. I'll put the 5-year weekly S&P 500 showing you the linear regression channel from the top and bottom, and this one showing you from the bottom where it is every time, and where the 50 simple moving averages in yellow and the 18 and the 116 ever since April, as well as last year October 2023, the 2025 lows in April, the rally up consolidate. We fell back down to March 31st and the rally up. The reason why I wanted to show the weekly, I wanted to show that 760.4, that in the prior week 2 weeks ago we rallied up and pushed above that area from this hammer in the 18 simple moving average, and we broke above the 5 SMA, and we did some kind of a star or a doji. The body's not up, it created a higher high, but it closed above the prior week's candle on a star. So on the weekly chart, if I go to the daily chart, and I wanted to do this together just to give you an overall view what the S&P has done. If I zoom in from here, you can see that the breakout was here on the gap up from the prior week. We have this gap up here. We are in an uptrend channel creating higher highs, but the Friday candle closed inside the Thursday's candle because the Monday was star, Tuesday was down, Wednesday pick up, Tuesday was the rally, and Friday we went up, but sold off. But we kept the 5 SMA between the 5 simple moving average and the 18. I do have a 12 in there, so that way you are aware of it. And there's a 50 SMA. Can we pull back to the down to fill the gap? Possible. It does not have to. If we consolidate in this area and we hold the lows from the Thursday low, and this is the Wednesday high. Remember, this was last week's Wednesday high. The Thursday, Friday, this was Monday, Tuesday, Wednesday, Thursday. Look above and fail, but we closed right underneath there. If this is very important to hold these two candles up here, and that's around the 772 to 770 area. If it does hold and we come back, pull a lower high, which creates a higher high and continue up is great. But if we gap up, I'm not going to be the person chasing to the backside of this linear regression channel. If it comes up there and falls in, it's a short back towards the Thursday, Friday's high of last week and the prior Wednesday to catch its breath in order to continue higher. So we're going to trade what we see on the charts. And the reason why I wanted to show this, I did it on an hourly chart 20 days earlier, but what I want to do here is show you that move up from the prior week. Okay, this was the push, the consolidation for 2-3 days. You can see that this area was a very important area to hold at the 774 quarter, as well as the 772.50 to 73. If it does hold, that's great. What I want to show you here, I put an hourly chart, some kind of a pattern for either side on the S&P 500. Everybody will be looking into the shoulder, the head of it, and creating some kind of a shoulder on the right if we fall in, and they think it's going to fall further down to create a weekly higher low. I think the possibility, I prefer look above and continue instead of, resetting to come down to that shelf at the 670 area and falling through it. Test below, get get itself back up and continue higher. So there's two patterns here on a head and shoulder that most people are looking at. They thinking it's going to fail towards that 716. This is the gap on the charts on the hourly. I took the area and I wanted to show it for everyone so people can see what the expected move at in relationship to where we are. So let's go now to the chart where you can see it. And what I'm going to do on the SPY, show you how to do the measured expected move. I can take this high from the week. The low was Monday and Sunday. This is the Friday's action. You can see it. The Monday's low was here on the SPY. If I edit the property, okay? We have the extension from 0 to 100, 1 to 200, and vice versa, 0 to minus 100. I use round numbers like instead of 0.236, 0.382, 0.618, 0.782. The reason why I don't use these Fibonacci, I want to calculate the numbers in simple units of 20, 25, 50, 60, 65, 75, 80, and so on. That's why I did them this way. And you can change the color for the weekly in baby blue. If I want to extend it to the left a little bit, all I have to do is just push the button or put the dates there on the left. So that way I know where my levels are for the prior week. If I do zoom down, you can see my levels where they are for the Fibonacci extensions to the upside and Fibonacci extensions to the downside. This is what we call the expected move. I'm just simplifying the numbers for you in order to see where that gap happened. And you can see it here between the Friday high and the Monday. There's that little island reversal continuation and going higher, and same here from the Monday Tuesday gap continue up. If we consolidate in this area to continue, that would be great on the S&P 500. Let's go back to the weekly. And the reason why I want to do the weekly chart on a 5-year chart on the NASDAQ instead of the daily to see where those levels are. So more or less now you see where the SPY is. Let's take a look at the QQQ. And I wanted to talk about the structure of the QQQ. I have the prior year annual Fibonacci high and low. was the extensions to the upside. We almost tested the 50 and failed, but on the weekly bar, you can see we broke out of the wedge. We couldn't make that prior high. We fell down, got a reverse hammer. This gap still on the charts, and this is a very important level. The weekly bar pushed up the prior 2 weeks ago, and this is last week's candle. It's got some kind of a structure in it. We can do the drawing so everyone can see it. That it's got some kind of a body in it. It's got a little wick on the top. Correct, everyone? We got a little. Oh, come on. Let's do this that way. And we got a little bit longer wick on the bottom of the candle. I just wanted to do this on purpose because this is where the open is, this is where the high is, this is where the close is, and this is where the low is for the bar. So it has a little bit more structure to it than the S&P 500. And what I wanted to show you is how to do a measured move on the weekly bar from high to low and where the expected moves are. We can use this candle. We can take the low of the March low to this high that we created and the low here, and I wanted to show where those extensions are. I'm going to change these colors a little bit to just a solid color, and I'm going to make that color more of an off-white yellow or mustardy color so everyone can see those levels on the charts. So I'm going to go on that weekly to show you where those extensions can be from the 0 to the 20, 23, 38, 50, and continue higher. If I edit this property, you can see where my 100% is up there. But if I do not make it through the 38% and come back, pull down to the 5 and the 18 SMA, find some kind of support to bounce, I want to keep that measured move on there. Let's go to the daily so you can see those levels on the daily. We can see on the daily chart where that expected move that I put on there, this was the prior gap that we filled in here. That was a very important area to hold. That was the rally. We got this small island reversal here. After that push, we consolidated. This was the Friday candle. Thursday, Wednesday, Tuesday, and Monday. And this is the prior week from that Monday rally. Is it possible we can pull back towards the 50 SMA and the 18 yes to fill the gap? Yes, in case we pull back. In case there's going to be continuation and gap, I'm looking at this candle and filling this area here on the expected move on the daily chart. So can I do the measurement for this one on the shorter distance? I want to show you how to do this. We can do the same thing from here all the way up here down to here, and where the expected move would be between the 51 and the 61% and the 78% would be up in this area. I just wanted to show it to you. Remove that. If I want to take the gap reversal from this gap from the island to this rally to this low here, here's my expected move towards the upside either way. Remove the drawing. So let's do the measurements on the hourly chart. We're going to go back to 20 days, 1 hour. Where do we see those levels on the expected move? I know my Friday was the high. My Tuesday was the low for the week because this was my Friday candle low. So if I do that, that's my measurement. I'm going to edit the property once again so you know where those levels are. I'm going to change them to baby cyan or baby blue, extend it to the left. So that way I have the levels on the chart. And if I zoom down here, I know where my expected move, if I'm going to push towards the 200% to the top or minus 100% to the down. But remember, usually the 0 to 20 and 80 to 100 are usually the support and resistance and the extensions to the top and the extensions to the bottom. Could it be possible that we do hold the 706 and 715 area, 712? Possibly. If this is going to happen, if we pull back, continue up, that would be great. If we push up on a gap up and clear the Friday and Thursday's candle from the prior weeks, we are expecting to move to the upside on the NASDAQ 100. So let's take a look at now the combo of the Magnificent Seven, including Netflix. I did not include in here SpaceX yet because we can look at it on a later date. Let's go to the daily chart. The reason why I wanted to show this, we are in that consolidation, zigzagging, compressing. We do have this island reversal gap up here. You can see it barely testing. There's a little tiny gap between them. If I do grab an oval or a box here, I grab this candle to this one. I wanted to show it. I'm going to edit the property, extend it to the right. I'm going to change the color to baby blue, extend it to the right to show everyone where that level is on the charts in case of a pullback. If I do zoom in here, you can see where that pullback possibly happened. If this is considered a flag, this is the bottom of it, and this is a flag. If it comes back to the backside of here and pulls up or continues to the upside and breaks out of that linear regression downtrend channel, that symmetrical triangle, because if I look at the symmetrical triangle from the bottom to the high, we are creating higher highs on the candle, but this candle on Friday was down. Due to what? Let's take a look at it on the charts. We're gonna uncheck this candle, okay? I want to show what happened to Tesla by itself. And you can see on the daily chart, there was a look above on Tesla. Look into the prior. This is the earning gap. When it fell down, it consolidated, created a rounded bottom. The cup of it retesting this high, breakout, and come back to close just slightly on that, just slightly above that area. If there's going to be continuation, I don't like this pattern. I know we are in an uptrend. I'm paying attention to the 18 SMA if it picks itself up to continue higher in Tesla. Let's take a look at SpaceX, spcx. And the reason why I wanted to show this is the earning report. The open was 135 to the 151. We rallied up to the 200. And what did I say here? Because of the call options that were here at the 215, 220. This was a short, and the put wall was supposed to hold it here when it rounded itself up. Failed here, continued lower, and we lost the IPO open and the close, and we eventually lost that 135 when it was getting rounded here. When it pushed up here, I called the reset here at 107, 108 to buy it back towards the 150. If I do zoom it, you can see that push up, consolidate, break up in the overnight to come and close at the 140 chart. You can see my close was at 140. If there's going to be continuation on SpaceX, the move is done for now. If it consolidates in this area and holds the 135 IPO number, then if there's going to be continuation to the upside, this is my weekly Fibonacci extension from 0 to 100. I did the prior weeks. So let's go on the charts to fix that level. So I'm going to go to a 20-day, zoom it back down because I did not do the measurement for SpaceX. You can see this was my last week's measurement to the 150%. So what do? I can either remove it. Okay, you can see it. I'm going to remove it, or do the same thing I did from the prior week at the measuring tool. This is my weekly high. Where is my weekly low on Monday? This is my weekly low on Monday on the charts. So what I do, I edit the property. Once again, I know it's a lot of repetition. You guys are going to go, this guy is overdoing it. So, but I know repeating it usually helps a lot with understanding the levels. So this is why I wanted to show this area at the zero line and the 134 area. If I do zoom it in, I don't have the extensions, these clouds that were the puts. So now this line here, where the call option between the 130, 135 has to hold to continue up. If we end up losing this area, that means the call wall that was up here, we're going to extend it, edit the property that was from before. That means the bears are going to defend it. So this is the area that we have to pay attention to. And you can see where that wall, let's go to this one, edit the property, extend it to the 24th like we did on the right side. This is the consolidation, and you can see where that wall has to hold, where where you came, tested it, rallied, tested it, broke out, coming back. Now this area up here, which when we fell down, we rallied back up in SpaceX, and in the group I called the 135 buy zone here. We rallied back up into the close and we held. Does this mean there's going to be continuation above the 140, this area here? Because this is now the area that we have to hold in order to continue. If it falls back, I'm paying attention to this area for accumulation in the future, or if the technicals break, then we look for the bottom side of the other side where the wall was. Edit the property, let's extend it to the right. We do the same thing, or you can type it in so everyone knows where those levels are, if there's going to be continuation to the upside or downside. Let's go right now. Take a look at S N D K SanDisk. And the reason why I wanted to bring these on the daily charts to show you these levels and where are the resistance and support. You can see in SanDisk, we were in that linear regression downtrend channel. We broke up. We went on a doji test, the backside of the channel and the prior day's high, rally up and reject right at the 50 SMA. Let's take a look at the MU. The reason why I'm bringing this, and you can see in MU, you can see that there's an island reversal here. It tested the 50 SMA and closed above it. If there's going to be continuation, even coming back here to consolidate, find support, or if there's going to be continuation and a breakout towards that, then the expected move would be around the 1,196 to 1,124 if the sentiment's changing between the semiconductor to the tech sector and the AI space. If I put IGV, let's do that together. IGV. You can see in the IGV rally, if I do this on the charts, on the daily chart, you can see that rally up, the breakout from this earning report, look above, fail, consolidate, create some kind of a small shoulder, which is a W formation, not a full triple top, and rally up. But we are in this consolidation. If there's going to be continuation, or do we fall back in this area where the island reversal to find some support and continue up on IGV? And you can look at the sectors in that as well. DRAM, and we can see in DRAM it's a little bit more weaker. We are testing between the 18 and the 50. We have a 32 SMA here, or 34, holding us up. If there's going to be continuation, I'm expecting the 50 SMA to break out and continue. If we end up falling, I'm paying attention to the 18 and this island reversal gap, if it creates some kind of a right shoulder to continue up in DRAM. So let's take a look at now last the S&P 500, the micro ES. And the reason why I wanted to do this, we're going to take the measurement out of here, remove the drawing. We can see on the right side where that consolidation was 3 times. That was a double top, the rally up, rounded bottom, and break up. But on Friday, we had an inside day that we did hold the 50% of the scandal. If there's going to be falling back in, I'm paying attention to that. 7,723 to 7,004 to hold on the S&P 500. This is the monthly expected move to the upside. What did it find resistance at? We're going to edit the property. You can see my 161 up here. I'm going to move that 161 from there and put 0. Let's do this. 1.782. 1.786, and we're going to make it small. I'm going to keep it 2 and push it up there. Oops, did we do it right? Edit the property. I guess I didn't anchor it. 1.786. Make it small, push OK. And there it is. You can see where that level is. I don't have the 200%. The 200% would be up in here on that linear regression channel. Let's go to the 1-hour chart. Let's take a look at the chart where it is in relationship to the lows of the week and the highs of the week, and get that measuring tool. And you can see where my levels are on the measured expected move on the charts to the upside or downside. Let's extend it to the left side and change the color to baby blue. That's my measurements, and I'm going to show you how to do the calculated move on this chart. we can do the expected move from high to low. I'm going to show you how to do this. If I do take it on the expected measured move from this low here, okay, to this high here and the bottom here, so to show you where it is, and I extend it to the upside, you can see this is my editing tool. I'm going to make it blue, okay? We're going to make it a different color so everyone can see it. We'll make it some kind of, we can do this, okay? We'll do this. So if I do this on the right, I wanted to show these levels on the extensions. Where is it? Okay, you can see it here. It didn't go all the way up where my 50% is and my zero line. The zero line has to hold in order to continue to the 50, the 61, and the 80%. If I do this, edit the property, extend, do not show on the right. Hold on. Push OK. Okay, they showed on the right. That's fine. So you know where those levels are. So more or less now you know how to do the expected move. Let's zoom it down. We're going to remove this one, and I'm going to change the data from the breakout on Monday. Remove the drawing. You can see this was the rush hour where the lows were. Okay, we take it to the high. We take it to the low. You can see it. And we're going to change this to the daily chart. And the reason why I wanted to show this on the daily chart, I'm going to remove the expected move on the hourly, remove the drawing. And I wanted to show that measurement from this area to this high where the expected move can be. So we do have the 50, we have the 61, the 78% to 100. Possibly you can go there. In case we do fall, we have the zero line, the minus 23, the minus 38 will catch up with the 50 SMA, and this should hold us up in order to continue. If it falls through, then we look for the minus 50%, which is right here, for finding some support to continue higher. And I hope this video was very helpful. If you have any questions, please reach out to us. I did not go over the breadth of the market or the market profile on the monkey bars. I'm going to leave it for the next time, the weekly video. Take care. Over now. Enjoy your weekend.